Let's face it, the tech landscape, I mean, it feels like it's evolving faster than ever, right?
Oh, absolutely.
Keeping tabs on who's doing what, what's actually working, and what it all needs for the future. It can feel like a full-time job.
It really can. And that's why we're here, I guess, to try and cut through some of that noise and get to what really
Yeah,
matters.
exactly. So today we're doing a deep dive into the first quarter 2025 financial results for Datadog. That's ticker symbol DDOG.
Yep.
We've gone through their official reports, the analyst stuff, even the transcript from their earnings call to really pull out the crucial insights for you.
Think of it as your shortcut to understanding what's really happening with Datadog right now.
Our goal isn't just, reading numbers off a page. We want to get the story behind them.
Right. What's driving their performance? What moves are they making that seem to be paying off? And, well, what does the future look like based on this?
We're boiling it all down so you can quickly grasp the essentials and, crucially, understand the so what.
Why it matters. And just a quick visual, their logo, it's a dog
Yeah.
with a graph.
Right.
Yep.
Pretty on the nose, I guess.
Yeah.
All about monitoring and data.
Exactly.
Okay, so let's unpack these Q1 results. What really jumped out? What were the key highlights?
Well, the first thing you notice is the revenue growth. Pretty strong. They reported a 25% increase year over year.
Okay, 25%. What's the number?
That hits $762 million. And what's really notable here is that this number beat both their own forecasts and what analysts were expecting.
The old beat and raise. Or just a beat.
Well, a double beat, they call it. Analysts were looking for something like $739 to $741 million.
Okay, so they cleared that easily. That usually signals good things, right?
Yep.
Strong demand, good execution.
Generally, yes. It suggests the underlying business has momentum.
Okay, so top line looks good. What about bottom line? Profitability, earnings?
Yeah, so two numbers to look at here. GAAP EPS was $0.07, but the non-GAAP EPS, that was $0.46.
$0.46 non-GAAP. How did that compare to expectations?
That one significantly beat estimates. The street was looking for something between like $0.11 and maybe $0.42. So $0.46 was quite a bit higher.
And just quickly, why do people focus on non-GAAP so much?
Well, it adjusts for certain things, often non-cash items like stock-based compensation. It can give, let's say, a clearer view of the core operational profitability.
Got it. So that big beat there might mean they're managing costs well or just, more efficient than expected.
It could be a bit of both. Definitely a positive signal on the earnings front.
Okay, so strong revenue, better than expected earnings. What about customers? Are they bringing in the big clients?
Seems like it. They saw a pretty significant 13% increase in customers who spend over $100,000 a year with them. That's the ARR, annual recurring revenue.
Okay, 13% growth in that segment. How many does that make now?
Around 3,770 customers in that $100 K plus bracket. And that metric's important,
Why is that?
because it shows they're not just getting lots of small customers, they're landing and growing with larger organizations. Those tend to be stickier, bigger deals, more stable revenue.
Right. Those big contracts really anchor the business. Makes sense. How's the overall financial health picture? Like cash flow?
Oh, very strong. Operating cash flow was $272 million. And free cash flow, which is often watched closely, was $244 million just for the quarter.
Wow. Okay. That's a good chunk of change.
It really is. It shows the business is, fundamentally healthy. It's generating cash, not just burning it. Gives them money to reinvest.
And the margin on that free cash flow.
Healthy, too, 32%. That underscores the financial strength.
So fundamentals look pretty solid all around that. Revenue, earnings beat, big customer growth, strong cash flow. How did the market take the news?
The initial reaction looked positive. The stock ticked up a bit in pre-market trading right after the announcement.
Okay.
Suggests investors liked what they saw generally. Reinforced some confidence.
All right, so a solid report card for Q1. Now, let's dig into why. What's actually fueling this growth? What are the strategic moves paying off?
Well, a really core part of their strategy seems to be getting customers to use more of their stuff, expanding across the platform.
The platform play.
Exactly. And the numbers show it's working. They pointed out that the percentage of customers using like 2 or more products, 4 or more, 6 or more, even 8 or more products, it's all increasing.
So customers are buying into the integrated suite idea.
Yeah, it suggests they see value in that unified approach. And of course, it makes the customers stickier, harder to leave if you're using 8 of their tools, right?
Definitely. That's that classic land and expand model we see a lot in SaaS. Get them in the door, then show them everything else you've got.
Precisely.
What about newer products? Any standouts there? Are the new bets paying off?
Oh, yeah. Flex Logs was a big one they highlighted. It hit $50 million in ARR
Okay.
in just 6 quarters. They actually said that's the fastest any of their products has ever ramped to that level.
Wow, okay, so there's clearly demand for that. What does Flex Logs do again?
It's about making log management more, well, flexible and efficient. Helps users analyze huge amounts of log data without breaking the bank, essentially. Addresses a big pain point.
Gotcha. Any others making waves?
Their database monitoring product is also doing really well. It's getting close to that $50 million ARR mark, too, growing like 60% year over year.
60%. Nice.
Yeah, and they have over 5,000 customers using it now. So these aren't just niche things. They show Datadog can still innovate and launch successful new products.
That's really impressive growth for newer offerings. Suggests the R&D engine is working well. Now, the elephant in the room in tech right now,
Yeah.
AI. How's Datadog playing there?
Yes, AI, definitely a big focus for them, you can tell. They're seeing really fast adoption of their AI-related tools.
Like what specifically?
Over 4,000 customers are now using at least one of their AI integrations. That number doubled in a year.
Doubled. Yeah.
And a key area is something called LLM observability as companies roll out these large language models.
Like ChatGPT and others.
Exactly. Well, you need to monitor them, right? See how they're performing, fix issues, make sure they're reliable. Datadog's building tools for that specific need.
Makes sense. You can't just deploy these complex AI models and hope for the best.
Not at all. They also mentioned Bits AI, enhancing it for things like workload automation, even helping people build apps using AI.
Interesting.
And they teased more AI announcements coming at their DAH conference in June. So clearly, they see this as a massive trend to align with.
So they're not just watching the AI wave. They're building the tools to help companies surf it, basically.
That's a good way to put it. And it connects directly to another key area, security.
Ah, yes. Security is always huge. What's their angle there?
Well, they have a pretty broad security portfolio now. Things like finding vulnerabilities, detecting threats, scanning for sensitive data, the whole gamut.
And are customers buying it? Is it getting traction?
Seems so. They said over 7,500 customers are using their security products now.
Okay, how big a slice is that?
It's about a quarter of their total customer base. And maybe more tellingly, over half of the Fortune 500 companies using Datadog are also using their security tools.
Wow, half the Fortune 500. That's significant penetration in large enterprises.
It really is. It shows a huge cross-selling opportunity, right? They already have the relationship through monitoring. Now they can add security layers.
Leveraging that existing footprint. Smart move. Did they mention any recent acquisitions that are helping build out this platform?
Yep, a couple of strategic ones. They bought a company called Eppo,
Eppo. What do they do?
feature flagging and experimentation. So helping companies test new features, see how they perform. This plugs into Datadog's product analytics offering.
Okay, makes sense. Understand user impact better. What was the other one?
Metaplane. This one's really interesting. They focus on data observability.
Data observability. Like watching the data itself.
Kind of, yeah. Helping data teams make sure their data is accurate, reliable, spotting quality issues before they cause problems downstream.
And that's becoming more important with AI, I guess. Bad data in, bad AI out.
Precisely. As data fuels everything from analytics to AI, ensuring that data is trustworthy is critical. So Metaplane addresses that growing need for modern data stacks.
Those sound like really targeted buys. Filling specific gaps, aligning with trends like AI and product analytics.
Yeah, seems very strategic.
What about globally? Are they expanding their reach?
They are. They announced plans for a new data center in Australia. That'll be their first one down there.
Okay. Why Australia?
Well, serving international customers better, but also critically, meeting data residency requirements. Lots of organizations need their data to stay within a certain region. This helps Datadog cater to that.
Right. Data sovereignty is a big deal for many companies. Okay, so lots of positive momentum, strategic moves. Let's look ahead. What did they say about the future? What's the guidance?
Okay, so for the next quarter, Q2 2025, they're guiding for revenue between $787 and $791 million.
And the growth rate on that?
That's about 22% to 23% year-over-year growth. And for non-GAAP EPS, they're expecting $0.40 to $0.42.
How does that guidance stack up against what analysts were thinking?
Well, that Q2 revenue guide was actually better than what many analysts had initially penciled in, so some optimism there.
Okay, good sign for the near term. What about the full year, 2025?
They raised their full-year guidance. For revenue, they now expect between $3.215 billion and $3.235 billion.
Which is what kind of growth?
That's 20% to 21% growth for the full year. And they also bumped up the non-GAAP EPS guidance to $1.67 to $1.71.
And they raised it because?
They basically said the strong performance in the first part of the year gave them the confidence to lift the full-year outlook.
Okay, another positive signal. Raising the forecast mid-year usually means things are tracking well. What about the bigger picture? Are they still confident in those long-term trends, like cloud adoption?
Oh, yeah. Management sounded very confident. They reiterated their belief in those big secular drivers, digital transformation, cloud migration.
Still plenty of runway there, they think.
That's the message. And they also stressed how observability becomes even more critical with all this complexity, especially with AI adding another layer.
Right. The more complex things get, the more you need tools to see what's going on. And you mentioned that DAH conference again.
Yep. End of June in New York City. Their big user conference, that's definitely the place to watch for new product announcements and strategic updates.
Got it. Okay, so the outlook seems pretty bright based on their forecast, but, we always need balance. Were there any potential challenges or headwinds mentioned, anything to keep an eye on?
Absolutely. Always important. And yes, they did report a GAAP operating loss.
Okay, how much?
It was $12 million for the quarter, which translates to a negative 2% arrested GAAP operating margin.
So even with strong revenue, they're still losing money on a GAAP basis.
Correct. It suggests that while growth is strong, they're still investing heavily, or maybe have some operational costs that mean they haven't quite hit profitability by that standard measure. Something to watch.
Definitely. What else?
There was also a slight dip in their non-GAAP gross margin.
Why was that?
They put it down mainly to higher cloud hosting costs and just continued investment in the platform. They said they're focused on optimizing, but it's another metric to track.
Okay, margin pressure from cloud costs. Makes sense. Anything else?
They did mention potential volatility from their AI native customers.
What does that mean?
Basically, these newer AI companies are growing super fast, right? Their needs might change quickly, and maybe they'll optimize their spending on tools like Datadog down the line. So it's a fast-growing segment, but maybe less predictable than traditional enterprise clients.
Interesting nuance. High growth, but potentially choppy. And I guess the general competitive landscape.
Right. It wasn't maybe explicitly called out as a headwind in this report, but you have to remember cloud monitoring and security is a very competitive space. Lots of players.
Good point. They don't operate in a vacuum.
Sure.
Okay, so let's try and wrap this up. If you had to distill it down, what's the main takeaway from this deep dive into Datadog's Q1?
I think the core message is, well, Datadog had a really strong start to 2025. They beat expectations pretty convincingly.
On revenue and earnings.
Yeah. And the growth seems pretty broad-based. It's driven by getting existing customers to use more products, by launching successful new products, especially around AI and security, and by landing those bigger, important enterprise customers.
So for you listening, hopefully this gives you a clear, concise picture of how Datadog's doing and where they might be headed, the key insights without, drowning in data.
Exactly. And maybe it leaves you with a thought. As cloud environments get even more complex, and now we're adding AI-generated code and systems on top,
Yeah.
how much more essential do these comprehensive observability platforms like Datadog become? What new challenges, but also what new opportunities does that create for this whole industry?
That's a great question to chew on. Definitely food for thought. And hey, if you do want to go deeper, you can always check out Datadog's full earnings release or keep an eye on that DAH conference in June.
Absolutely.
All right. Thanks for joining us for this deep dive.